Okay, so we're going to take a look at a demonstration for Orangeburg Flower Shop where we're going to be setting up the company, putting in the chart of accounts, putting in beginning customers and vendors and their beginning balances, and then handling transactions for the month of October for that company. So we have, and you might want to have this in front of you as we go through the demonstration. But we have our chart of accounts, our beginning balances, here's our customers, here's our vendors, all on this first page, and all the information we need to know. So I'll be working off of this form, and you should have it in front of you. Okay, so we're going to create a new company. Okay. I'm going to put demo Orangeburg Flower Shop. Okay, this is a sole proprietorship, and we'll say next. We're going to build our own chart of accounts. We're going to use accrual basis of accounting, real-time posting, 12 monthly accounting periods. Because it's a sole proprietor, the law requires them for their first period of the fiscal year to be January. Now, since our transactions are dated in October, I'm gonna, and it's not October yet as far as the system date is concerned, when I'm doing this, I'm going to go ahead and choose 2021. Okay, and I'm hitting next and finish. And it takes a minute for it to set up the new account. Say don't show the screen, but it is telling me my chart of accounts is the first thing I'm going to need to do to set up the company. Now we're going to be mainly working with the customers and sales and the vendors and purchases screens, but to set up the account we need, of course, to go to the banking screen, go to chart of accounts, new account. All right, now from that Word document, I'm going to go ahead and put in my chart of accounts. There's my account number. The name is cash. Cash is a cash type, so I'm good to go there. I say save and new. The next one's accounts receivable, which is also an asset. And there's a special type for accounts receivable in Sage 50. So there we go there. And save and new. And we have furniture and fixtures. Fixtures are things like light fixtures, display cases, shelving that we're going to put in the store to hold the merchandise inventory items. Okay, so just like equipment, furniture and fixtures are fixed assets. Hit save and new. Okay, we have accumulated depreciation, dash furniture and fixtures. And Sage 50 has a special type for accumulated depreciation, so we put that in there as that and save and new. Okay, now we have our liabilities. We have account 202, which is accounts payable. And again, there's a special type for accounts payable, which is accounts payable. Okay, then we have our owner's equity accounts. In this case, we only have one, which is the capital account. PP, capital. And our capital account should be our equity-retained earnings account. We have to have a retained earnings account or it will not let us go forward. Okay, revenues, we have a 401, and that's sales. Sage 50 calls sales or revenue, they call that income type. So we put that in as income. We have account 402, just sales, returns, and allowances. Now, sales returns and allowances is a contra revenue account. It's attached at the hip to sales, but has an opposite balance. But in Sage 50, there is no contra revenue account or contra income account. So we have to put it in as just regular income. Then when we go ahead and do the beginning balance, we'll have to put a minus sign to show that this is supposed to have an opposite balance. Okay, now we have our expenses. Expenses, we have two different types of expenses. We have our cost of goods sold type of expenses, and we have our regular expenses. The cost of goods sold type of expenses are going to go on the cost of goods sold part of the multiple step income statement so that we can have sales minus cost of goods sold as gross profit. So the things that go into cost of goods sold types is anything that's part of the cost of goods sold formula. If this was a perpetual inventory system, we would have an account called cost of goods sold. But this is a periodic inventory system, so instead we have an account called purchases. So any purchases, purchase returns and allowances, purchase discounts, or if we had a freight in account, would all go under a cost of sales type of expense account. Okay, we have account 501, and that's purchases. And again, instead of choosing expenses, we're going to choose cost of sales. So it goes correctly onto the multiple step income statement. Save and new. We have account 502. Now this is purchase, returns, and allowances. Okay. Now purchase returns and allowances, just like sales returns and allowances, is a contra account. It's attached at the hip to purchases, which is a cost of sales, and we don't have a contra cost of sales, so we have to put this in as cost of sales. But when we put in the beginning balance, we're going to have to put it in as a minus. Okay, now we have account 503, and that's purchase discounts. And again, this is attached at the hip to purchases, but has an opposite balance. So we're going to put it in as cost of sales, but we'll put a minus sign when we put in the beginning balance. Okay, we have account 601, and that's wages expense. And now that's a regular expense. It's not part of cost of goods sold. Save and new. And we have 602, and that's telephone expense, and that also is a regular expense. And we say that's all of our accounts. We say save, and we say close. Now we want to make sure that everything looks right, so we can go into view and edit accounts. Or you can bring up a chart of accounts report. Either way, you're going to want to take a look at Are all my account numbers correct? Do I have all the names in there correctly? Do I have the types are in there correctly? Everything looks good. Of course, all of our balances are zero. We haven't put any in yet. We need to get the chart of accounts correct before we put in the running total balances. Okay, so I see everything is good. If you need to change something, maybe you put sales in as an asset or something, you can simply highlight it, double click it, it'll take you right back there and you fix whatever you need to fix. Okay, but mine are right, so we can say closed. All right, so now we're going to go ahead and put in our beginning balances. So I could have done that while I was there. It doesn't matter which one of these. Cash is highlighted, so I'm going to leave it at that. I'll double click. It takes me back to cash. Now, I want to put in the account beginning balances now, so I'll click on this account beginning balances. It asks me when do I want, what date do I want it? It starts out with the year before the year I'm working with. Okay, I'm working, remember, with 2021. Now my transactions for Orangeburg Flower Shop are in October. So I want my beginning balances to go in the period right before October. So that's going to be September of 2021. Now you have to be careful when you're doing this. Pay attention. Don't just pick any September, because all of a sudden you're going to wonder why none of your numbers, and you took all this time to put them in and they're not showing up. It's probably because you didn't pay attention to this step and carefully do what you're supposed to do. Okay? So your beginning balances are in here in the month before your transactions. Your transactions are October of 21. I want my beginning balances in September of 21. And you say okay. All right, it brings up the box, and you can see all the white boxes on the left, our debit balances, and the white boxes on the right, our credit balances. Okay, so cash is an asset. It does have a debit balance. 18,225 is our amount, so that's good. Accounts receivable, it's a debit balance, it's an asset. Furniture and fixtures is an asset, 25,350. Accumulated depreciation, because Sage has a separate type for it, it knows that it's a contra asset and has a credit balance. Okay, so we don't need to put a minus sign. Okay, accounts payable is a liability. It has a credit balance. The capital account has a credit balance. 4, that's owner investment. Sales is a revenue account. It has a credit balance. Now we get to sales returns and allowances, and there is no contra income, contra revenue account. And so it's got it on the credit side. Our white box is on the credit side. Okay, but it's supposed to have an opposite balance of sales. It should have a debit balance. So I need to put in a minus sign, and then I'll put in the amount, 2,200. Okay, now we're down to purchases, which is a cost of sales expense type account. And so that should have a debit balance, 42,000. But here's purchase returns and allowances, and that's a contra expense account. It's attached to purchases. It has an opposite balance. Purchase has debit, so purchase returns and allowance needs credit. So again, I need to put a minus sign, and that's 1,500. Purchase discounts is also a contra expense account attached at the hip to purchases. So it also should have an opposite or credit balance. So I put a minus sign, and that is 600.